All right, welcome you guys. This is Eric here with Investor Central Club and STAX Software. We've got Max Pitts here. You can see if you're part of our Discord or if you've been watching our channel. Max has been doing a great job in contributing to our software, contributing to our Discord, allowing people to understand what's going on with the flow, what's going on with the dark pools. He's been doing daily recaps and actually putting out quite a bit of content. We will link his Substack below. Make sure you subscribe to that so that you can get that updated information. And as well with us, we've got a Beehive newsletter that gets sent out once a week so that you can keep on top of things when it comes down to the way that the markets are moving. Welcome, Max,
Hey.
sorry. Again, I wanted to point out, and I want to thank you. You've been contributing quite a bit to our community lately. I think you said that there's been what 500 posts in just a couple of weeks, and adding quite a bit of valuable information. Max will do a daily recap in terms of what's going on with the markets, what the dark pools are doing, what the biggest flows are, giving an idea of what's going on out there. And I know for a lot of those that are part of our community who might not exactly know what direction to go with things, it's very, very valuable information. And again, I want to thank you, Max, for putting all that information out there for us. But today, what we want to do is a little interview. We want to get to know you a little bit better, get to know
Yeah.
how you got involved with Investor Central, and kind of get into the inner workings of what you're thinking when you see things. Because again, people can see the Substack, they can see the newsletters, but I know a lot of them have questions as to what are you looking out for? What is it that you've noticed with Stacks and our software? So yeah, I'm going to give you the floor right here. Let me know. And I'll interject here and there if there are additional questions that people may want to ask.
Perfect. So my name's Max Pitts. I'm from the Bay Area. I grew up in Dublin, California. Spent a lot of time in like San Francisco and Oakland. Started like this whole investing thing during COVID pretty much. I had a bunch of free time. I have a data analyst and like my background is in like sales forecasting and basically how everybody gambles on earnings reports. I was the person who would have to figure out like what our projected EPS and revenue for the quarter and the year would be based on like our sales team's performance. Um, so it was just one of those things where I did it for work, but I never really like linked it to like, oh, the stock market. Like there's a correlation between when one of our reps makes like 200% of their quarterly number and us getting a big ass bonus at the end of the year. So it's just one of those things where when I started investing, I started off with Flow Algo, and using that because one thing I figured out quickly was like, well, if I can just follow where all the big money is, and they had this whole like golden sweep software, and it was insanely expensive. That was like 250 a month. So I started off with that, and then I just started going through tools. And the one thing I noticed was like a lot of them just have a lot of stuff. Like they're not condensed down into like actionable resource. They're actionable resources if you're willing to dig for the data, which for me, I have no problem doing. As you know, I stare at flow pretty much from like market open to market close till after hours. Um, so I have no problem doing that. But like for the average person, it's like that's just not reasonable, especially if you're doing multiple trades. So I ended up finding Investor Central Club because I found you guys through Twitter because I was looking for flow software, and then I found Stacks AI and I was like, this looks interesting. So I just started paying for it and using it. And one thing I always do, because again, options are confusing and they don't really make sense sometimes, especially the orders. So I like to just kind of help people start recognizing patterns because I think that's the biggest part of options analysis and reading flow is you need to recognize patterns and what certain orders and how they come in and what they mean, especially with like the circumstances, the strike, the date for expiration, and the volume at that. Because you can see, like we saw with Google, that guy bought 5,000 contracts for the $200 calls at 315 average or 310 average, and then he bought 8,900 more. So he like almost doubled his position at a 325 average. So like it's just small things like that. But yeah, I then they were looking for influencers or people that were just like interested in doing analysis. And for me, trades and gains is like my friend's thing that I got brought into, and then they gave me the Twitter account. So like this time last year, we had like 560 followers on Twitter. And right now, I think we have like 3.6K or something like that. And I've been writing market recaps every day since June of last year. And then I started bringing you guys into it about 3 or 4 weeks ago, and I've already put out 25 or 30 flow recap articles. So I do like a market recap, just like news, like what happened with PCE, like what the implications are, that kind of stuff. And then I'll kind of give like my input. And then also the secondary one is the flow analysis. And it's where I take the biggest big money orders, the biggest non-ETF big money orders, unusual options, and then flow scanner and dark pool. And then I just kind of break down like anything that kind of stood out or seemed a little weird, but I also post the entire thing. So when you get the newsletter, you not only see the insight, but you can also look at it for yourself. So then you can get into a play the next day or gives you conviction for something you might already be in. So yeah, that's kind of my background and how I got into this whole thing. And now I'm here and hopefully here for good.
Yeah. A point I want to elaborate a little bit more on is, you mentioned how, I mean, again, there's plenty of flow software out there.
Yeah.
One of the things that, I've been through it as well. There's a lot of good ones out there, but one of the things that a lot of our users tend to tell us is that a lot of it seems to be a little bit noisy.
Hmm.
As much as data is valuable. We all love having the data, but sometimes what a lot of these other companies do is they put all of it right out in front of you.
Yeah.
One of the things we've understood is that we want to know what the big money players are doing. And a lot of our filters that we've built into our software actually filter out the insignificant situations, the things that are not really worth us paying attention to, because whether they're too small, too insignificant, or are situations that really um, don't move the markets, or don't signify that somebody behind the scenes happens to know something.
Yeah.
And what we've done with our software that I've found is really impressive is we've been able to streamline it for the user, and for the interface is designed for you to be able to look at the flow, make a decision quickly, and get into positions as as those are coming in, because like we know in options, the trades go so fast.
Yeah.
And if you're off by a couple of seconds, even the ask and bid spread could be completely different than what was just 20 seconds ago. And so,
Yeah.
that's one of the things that we've heard from a lot of people. It's important that we have a easy to use interface, and something that not only we offer the voice alerts, we offer the push notifications as well, but the way that our software is set up is very easy to use and easy and clean for people to notice as well. And also, you mentioned we have our unusual options filter. We have our STAX AI software, and our filter for that as well. What have you noticed with those that that can be useful for those that are just getting into options?
So with Stacks AI, it's useful because typically it's like an institutional player that's front running a move or like knows something definitely. So like if it's very clear. Like I start because so one of the things I did today actually is I like took the week and today filter off, so it's just all everything. And I took like the largest Stacks AI orders, And the one thing I noticed is like all of the ones that are like kind of past and done for the most part, or the move has already happened, it was definitely front ran because the one thing that I can always relate to is when I find unusual or stacks calls, I can usually find a news article within the same day, a couple hours later, or the day after, or 2 days after, I think is the longest gap I found, of some kind of news dropping that would kind of mimic why it would be like, oh, okay. Like I'm sure there's a T-Mobile unusual thing because T-Mobile CEO came out and said their second half of Q4 was going to be down. And everyone was like, oh, he's just sandbagging. They have earnings in 2 weeks. So he wants to like get EPS and rev expectations down. But they actually were struggling because they are like struggling with holding on to their users. So he was like, we're having problems with this because people can't afford our service. So like people are dropping like flies. And when that got released within like 2 hours, that was the day T-Mobile dropped like $20 in a single session. Like 2 hours before that like candle hit in the 5 minute, there was a news article that came out from that CEO making those comments to reporters earlier in the day. So it's just those are the things I try to find, and that's why on my Twitter you'll see like random news stories that break and then options flow that kind of mimics that or follows that. Or when I do my recaps, it's the same thing. So I think with unusual, it's usually like it's the opposite of what the trend is. And I also feel like a lot of times the unusual options are like institutions fading retail in a sense. So like retail might be going one, like when we see a bunch of spy puts come in or spy calls come in, we'll typically see a big spy unusual order that probably 60% of the time will have like a big money filter attached to it too.
Yep.
So
Hmm.
it's just small things like that where I'm like, okay, so clearly like institutions aren't like we're sold on this yet. They still know that there's like tariff stuff that we have to get through. If a rate cut doesn't happen, there's a huge rug pull that's going to come into
Yeah.
play. So there's just if it's the one thing I've been talking about is anytime I do cover unusual, the theme since I've kind of started this series has been like institutions other than tech aren't sold on this like total rally yet.
Yeah, I definitely see that. And again, for those that are just joining us on YouTube, I do a monthly recap and a monthly back testing on Stacks AI. And one of the things that I've definitely noticed with Stacks AI is that, just like Max said, there usually is some sort of front running of news that's about to come. Sometimes it's also involving earnings to some extent. But I will point out that in a very rare case, every once in a while, there are situations where they got into a position, let's say, most of the ones that we see are calls. They get into a position because they're expecting good news or some sort of news to boost the stock to come along with it. But as we all know, with the options market and with the market itself, just because it's good news doesn't always move it in that direction. One that really stands out to me that I always bring back up is there was a Pinterest weekly Stacks AI call. So earnings was that Thursday. They bought in on that Wednesday and their expiration was for Friday. So, automatically we tagged it and, they're spending millions of dollars on that position.
Yeah.
And it turns out that Pinterest missed their earnings, but they also had they were integrating with Google's API, which by the way,
Mm.
you think about it, you're integrating with Google, you're gonna, that's something that should be boosting the stock like crazy. And so the stock dropped because the earnings were poor, but got a boost after hours because of the Google news. But
Yeah.
at the end of the day, it didn't actually end up, you know, pushing or popping it much higher. And so actually that was one of the rare instances with Stacks AI where it turned out to be a miss in that situation. But a lot of times what we've noticed with it is, like you said, there's some sort of news coming out. Somebody behind the scenes is in the know, behind those closed doors, happens to be able to get into on these options early on so that they can take these millions of dollars and multiply them. They're not looking for just a 20% return. They're looking for a multi-bagger.
Yeah.
Are trying to double, triple, quadruple the amount. And we've seen, as high as 30x for some of our Stacks AI positions. And one of the crazy things is when they purchase quite a bit of time along with it, which allows that, allows it to marinate for a little bit. And over time, with that good news, they might know that a lot of good news is about to come. They've been putting work in, they've been making deals behind the scenes that just haven't been released in reports just yet. And so as a result, they got in for something much later in the year or even next year as well. And so while those premiums are cheap, and as time has gone on too, we've gone through and we've actually added additional parameters for our AI to calculate along with. For example, we've done the back testing to show that, we understand with options IV, when IV is really high, you're fighting an uphill battle when it comes to your premiums. So we
Mhm.
decide to eliminate certain IV and certain high IV positions because those ones are harder for those to come back and profit from. Um,
Yeah.
but yeah, like Stacks AI, for those who don't know, Stacks AI has got over a 90% hit rate, 90% win rate, and on average with our 320 something prints that we've had over the course of 16, 17 months, it's got a 224% average return, which like
That's
again, for
crazy.
anything, that's ridiculous, right? Most people are just aiming to beat the S&P 500, while in our situation with Stacks AI, we're getting multiples on those situations. But again, it's not one of those things like, if you're looking for these types of high returns, there's obviously always going to be risks with it. And I do believe that one of the biggest risks is understanding your own psychology, because a lot of people, you know, fear and greed will always play into the markets. You and I, we're very, very familiar with that. But fear and greed will play into the markets, and not understanding how to deal with that can often lead into, failures of sorts, or, situations where you may lose out even though you are green for quite some time ahead.
Yeah.
Um,
I mean, I think one thing I always tell people when they get into investing, and I think this helps with like even reading options flow, is like invest in stuff you're actually interested in so you understand like how the business and economics of it work. So like for example, with like let's take Tesla, something everybody invests in. They have like four things that drive it, let's say. They have the consumer side, which is their sales. They have their like we can call it infrastructure side, which is like their energy, their tech, like solar, all that kind of stuff. They have their R&D, which is research and development, which is them building out new models, putting out cheaper models, and then they're now going to have this like autonomous section. So like if you have that kind of understanding of like you can look at a business and go, are they financially driven, consumer driven, or are they like business to business driven essentially? Revenue driven, like those are the ways you can kind of like categorize companies. And some companies, like you see with Tesla, you see with IBM, you see with HP, Dell, these companies are like Dell, for example, people think it's consumer driven, it's financially driven. That's why they put out these crappy laptops that they give to every single company that nobody likes because at the end of the day, they're making a killing on them because companies are like, we can buy 200 of these things for nothing compared to the 100 MacBooks we just had to put into engineering and spend an arm and a leg on. So it's just having that core understanding of like how a business works will also help you like manage positions and manage these calls because the one thing I will say is for the majority, like the Tiva one I'm in right now, that doesn't expire until November 16th of 2025. So like that has a good amount of time. And as long as it keeps trending in the right direction, it because bad news is going to hit. It's inevitable. Like it's going to happen. But the two things you need to understand is like, do you understand the business and how much time do you have? Because like in tech, if I announce something new, it's a 12 to 18 month runway before it starts to hit our revenue. So like that thing isn't going to produce any type of bottom line unless a partnership comes into play, unless there's a huge pilot program that takes off, unless you see things like 44 billion dumped into NVIDIA's Blackwell systems by literally 7 companies. Like, unless you see something like that, that product really isn't going to start to be a revenue driver until like that following quarter the next year. Realistically, they won't report on it. It won't really increase their bottom line by any perspective, but that's also why like their Q like 2026 FY might be higher because this thing is now going to be like rolled out and smaller companies in the SMB market, and they'll start integrating it into their laptops that they partner with for gaming laptops, and then putting it into their GPUs that they sell to consumers. So it really takes a long time for that stuff to roll out, and that's why I really do focus on tech. I just know that industry like the back of my hand. I've worked for a couple big companies behind the scenes, and I've gotten to understand like that lay of the land of like working for a Facebook or a Snapchat size company. I have that understanding of because I've had the privilege of getting to build teams for forecasting at those types of companies. So it's something that like the better understanding you have of the financials and just like how does that business work? What are the ebbs and flows of it? It'll help with like that psychological part because you'll just understand that this is a part of it and those are opportunities for you to reposition or scale even more in depending on how much conviction you have.
Yeah, definitely. And that brings to mind too, how they always say buy the rumor, sell the news,
Yep.
right? Because at the end of the day, the pricing of those stocks is often correlated to what people perceive the stock is going to be worth. And the big institutions understand that. So once the rumor starts to go around that something's about to happen, that something's going to hit, a lot of times it's going to take time. It's not going to happen overnight. Infrastructure, teams, processes, the flow, the way that these companies work, it takes time for it to build. And so, yes, they might create a partnership, or yes, they might be announcing that they've got some new tech that's going to be released, and the stock itself very quickly will move in a direction, but it's going to take time for that to hit. So very, just like we said, buy that rumor, but make sure as soon as that news really hits, it's time to sell. And a lot of times with the um just like fear and greed, like we've understood, is understand when the masses finally hear about it and start to understand it. So I always like to use, some people use the stripper index. I like to use the grandma index. When grandma starts to ask you if she should be getting into GameStop, you need to sell, right?
Yeah.
If
Yeah.
grandma's talking at the dinner table, at the holiday table about Bitcoin, that's the top for Bitcoin. And in the time that I've experienced with the markets, that's been actually quite a good indicator of when you go out and everybody's talking about it, that's the top. When everybody's talking about how the markets are about to crash, how everything's going, going to hell, nothing's good anymore. The markets are completely ruined. That's the time to buy. So the
Hmm.
fear and greed of the markets, it's interesting how, like, it is a lot of psychology and understanding that you're going to feel uncomfortable when everybody's saying, be scared, be scared. This is a time when the markets are unstable, and it's going against your own psychology to go purchase. But at the end of the day, what I like to use, and what we've noticed is, let the flow help you make those decisions too, because behind the scenes you can start to see, yes, there's going to be a heavy put to call ratio where there's most people buying puts, but if you start seeing a lot of big money calls coming in, right? Institutions are not willing to let their $44 million in Tesla suddenly go kaput, right? They're
Yeah.
not trying to make their $44 million go to zero. So, money speaks volumes, especially when they are purchasing in those high quantities. And keep an eye out for especially those higher risk situations, short term far expirations, those types of situations are, an indicator that somebody knows something about what direction the markets are going, and the market makers are going to eventually sap that liquidity from the public as well. So right now, especially like you've said too, you know, I agreed with you as well. Is I don't think we've hit a real bottom just yet,
Oh yeah,
right?
no, we're nowhere near like shit, that's the thing. People are like, oh, like that, you remember that day when they were like, oh, the 90-day pause on tariffs and it was the rumor. Spy jumped $20 in the span. Like from that, as soon as that hit the tape, it literally those two candles were $20. Was a $20 move. And
Yeah,
then it went into a $35 sell.
yeah,
Like it was because the White House came out 5 minutes later, like, we never said this. We don't even know about it. It's not true. But then what happens 2 days later? It's
yeah,
confirmed, and then we
exactly.
go back and run. But like it's always waiting for the other shoe to drop, basically. And I think like I always use Twitter. If I printing tendies taught me on Twitter, if all of Twitter is talking about it, just fade it and you'll be fine. Like if you're on the opposite end, then you're on the right end. If you see a bunch of gurus and like
Yeah,
influencers talking about, oh, this is the bottom or this is the top, like that's typically an indication of
go the other way,
you
right?
go the opposite way and you'll
Yeah.
be safe.
Yeah, same with like, inverse Kramer is a very popular one.
Yep.
But I definitely agree, like inverse Reddit or just inverse public opinion. It's interesting as I've been trading is the more I'm on the opposite side of what everybody wants, the more like it's a weird confidence. It's a weird like actually this is a good position to get into because it's interesting how there's so much liquidity on the other side that, the market makers can sap that liquidity and push it in the opposite direction. And
Yeah.
just like again, I don't think this whole, the fear side of things isn't over, especially with the markets. There is a bit of optimism now with, trade talks going on and things like that. But at the end of the day, I don't think that's completely, it isn't over. This
No.
pause that we put in is a temporary situation. And this whole thing, I do believe it's just getting started, really. So there definitely could, very likely is going to be more pain to come. And if you look at the tape too, there's a lot of larger money puts for longer term as well when it comes down to it. So that's something to keep an eye out for.
Well, you Friday we had consumer confidence and that so we hit a low last month for it and we just hit the same low, 52.2, which hasn't been hit since November of 2022. And that hit again for the second consecutive month. So what's going to happen now is with PCE, that's going to come in cold because nobody's spending money. And then I do a breakdown of PCE too of like the categories that they take into account. So then we can see like what's up and what's down because that tells more of the story than like month over month and year over year. It's more about the categories because then that can kind of help guide you with like what to invest in as like a retaliation. I don't or whatever you want to call it. So PCE is going to come in bad. CPI is probably going to come in bad as well. Um, like all of that's going to come, and that's the problem because those need to come in like moderately or close into what's expected in order for inflation to drop to our 2% target, which is what the Fed has been wanting for the last 2 years at this point. And with rate cuts, if we do get a rate cut, it's going to be early. It's going to be too early. It's going to be too much because he might get bullied into another 50. And then if you remember last time we got a 50-point cut, basically all the Fed members came out like a month and a half to 2 months later over that next quarter, and all had buyer's remorse. And they were like, we cut too much too early, and basically took all of our cards off the table with that move because now we have no room to really wiggle at the end of the year or make any type of like pivots or change any type of policies now because we're kind of stuck.
Yep.
because we used up our we used up all of our tokens at the arcade at this point.
Yep.
So it's just that's it. I think that's the other thing is if you can understand how to read options flow, you can also understand how like all of these reports have to do with each other to some degree. Like, guess what? Housing's up right now, but it's technically not because the rate's at 6.73%. I called in September. I said 2% will never happen again in our lifetime. And if it does, then the housing market has collapsed. Like that is the only way that'll happen. 6%, and this is when it was at like 6.23, and that's back in I think like November. It was like between 6.1 and 6.2. I was like 6%. If you can get 6%, that is the new 2% for 2025 and moving on. And as you can see,
Yep.
that has been because it's rates have not dropped. And when rates do drop, it's because it's gone from 6.6 to 6.3. And for people who don't know about housing, if you're getting a 6.3 interest rate, it's just you might as well just call it 7. And if you're getting something closer to 7, you might anything over 6.5, just call it 7.5 at that point. So you have to understand like hedge like real estate's the one area where hedge funds can just buy up and inject as much money as they want to with no red tape. Like there's no barriers they have to jump through. There's no restrictions. So 7% is going to price out 90% of the population for first time home buyers, especially in a time where right now job jumping's at its lowest. If you switch jobs, you actually could make 25% less than what you're making right now. Like that's the risk. But on average, people are just making the same that they just made from wherever they left. So there's really no risk, or it's not really worth it. That's why jobs reports have been hot or really cold because people are either moving or people are just filing for unemployment. Like there's no real like companies aren't aggressively hiring with the big salaries because they also don't know how um, tariffs are going to impact their business. So if anything, they're just laying people off. So it's if you can understand like same thing with options flow, same thing with data reports. And the funny thing is those data reports will directly affect options flow. Like if jobs come in hot, guess what? You're going to see a bunch of calls on the board. Jobs coming cold, you're about to see a bunch of puts come in. And that's when you'll see me post on Twitter those big, I am not filtering those blocks, by the way. Those are like blocks that come in when you see like those 7, 8 orders where I'm like, IWM put wall was just built in real time. It was really built in real time because 8 orders came in consecutively, all within 2 minutes, all within about 2 cents of the average between them. So it's one of those things where if you can understand that aspect, that also really helps with understanding option flow. And you don't need to understand it at the level that I do or at the detail that I do even. If you just know like, oh, we're expecting 122,000 jobs. So if we get 124, buy calls. If we get 120, buy puts. Like if you have that simple understanding, like hot calls, cold puts, like it will make reading flow so much easier. Because once I started to understand the economic reports, I was like, this is why flow looks weird today, or this is why we just went from call premiums being at like 144 million to 60 million against puts to now 260 million in puts against that same 144 in calls. That has not moved yet. So those are kind of that's just kind of how I've taught myself how to invest basically is like news plus options flow equals sentiment, which gives me, and I don't buy the contracts. Like I'm not gonna go and buy a $22 Tesla contract, but guess what? If some guy out there is willing to bank $44 million, I can buy something further out and
Yep.
near in the strike or near like closer dated and play the momentum at
Yep.
least. But until I see him sell his $44 million position, I think I'm safe. As long as the IV doesn't spike, as long as the volume stays there, I'm safe with my little 350 call that I might have taken. That's $60 out of his range. But I also was able to buy 10 of them, and I just needed a $1 move to make $1,000,
So,
which, as we saw, those things made a $19 move.
yep,
They went from 22 to 41.10. 41.50 was their peak.
yep, yep.
So,
Yeah, and that's a strategy that I want to talk to you about too, is um, you know, Andy is also another one that utilizes this strategy, is taking the flow, understanding that you don't have to get into the exact same ones as they are, because again, those institutions are balancing a bit of, what their institution, or if they're a hedge fund, they've got a
yeah,
risk profile that they have to adhere to. So if, in that situation, that Tesla 44 mil, they almost doubled it, right? They added what, 80% to that.
yep,
So at least 30 to 35 mil on top of that. But, for you and I, we're not anywhere close to that. So
no,
what's a good indicator, like you said, is while that whale is still in that position, you can go and take a look at, the same type of direction. If they're calls, they're going on the upside. If they're puts, go on the downside. But look for a contract that has solid open interest for a shorter term or for a further expiration. And in those situations, I've found quite a bit of success as well, is find those options that you're comfortable with. Obviously, make sure that you're still aware of the Greeks and things like that.
yeah,
But that same move that got them 80% for something that was just, for a month out instead, is looking at a multi-bagger, right? So, and you don't have
exactly.
to risk 2K per option. You can go in with your, 100 to $200, $300, if anything, per option. And if you can go and get yourself five of those, 10 of those, you'll quickly make that $1,000 or whatever it is that you're looking for in terms of that return. Obviously, there's risks with it. Make sure that you have your stop losses ready, or make sure that you're monitoring your position. But keeping an eye on what that whale is doing. So if suddenly the volume, of that 44 mil, whatever number of contracts they purchase, if that hits the tape again, keep an eye out for it and understand, hey, maybe they decided to mitigate their risk. They decided to get themselves out of that situation. But a
Yeah,
lot of times it's one of those things where there definitely are returns to be had if you understand how to play that game. If and Chemo's always said this, if this was easy, everybody would do it. We wouldn't have other jobs in this world. Everybody would
exactly.
just be options traders. So a big part of it is learning how to not only read the flow, read the tape, but also understanding your own psychology. Because again, you could look at that quick, you look at that big pop, and if you don't sell it and next week it opens up lower or opens up and drops suddenly,
Hmm.
all those gains are going to evaporate into thin air. And I'm sure we've all been there. We've seen a great big pop and got greedy with it and let it ride out further and further and further, and all of a sudden those gains evaporate. Because again, the hard part about it is, if you are going short-term expiration and or even further out of the money, your theta
Yeah.
can kill you. Your theta can eat away at those contracts very quickly. So you got to be quick with some of those pops.
Yeah, exactly. Especially if you're further outdated. Like for me, I know like if I'm following a whale, I'll typically buy like minimum 2 weeks out because they might be a month out, but depending on news and depending on just the overall flow, if I'm seeing a lot, if I see a call like for that $44 million sweep, that would have been an easy call to follow because you also saw a ton of Tesla calls just coming in. And Tesla closed green for flow scanner, I think like 3 days in a row at one point. So it was just like, and it was a 50. I mean, granted, it was close. Like it was very, Tesla and Nvidia are the two where it's just like, it's a coin flip. It'll be like 24.6 million calls to 23.8 million puts. And it's just like, I don't know. And people are like, what do you take away from that? I'm like, it's roulette. Like it's roulette and whatever the hottest like black or red, whatever has been hit the most so far and consistently, that's what it's probably going to land on. So if it's been opening green recently more than it's been opening red, it's probably going to open green.
Yeah.
Is it a guarantee? No, but like is it a 60-40, 60 green, 40 red? Yeah, probably.
Yeah.
So it's just understanding like to your point,
Probabilities,
that
right?
risk and your risk tolerance. Like, am I willing to risk $1,000 and give myself a 2 week runway to make whatever? Because I'm gonna sell half my position at 75%, and then I'm gonna put like sell orders at these levels just in case. And that's another thing is when in selling puts and selling calls, that's another indication of if a top is coming in or if support is about to start forming. So if you see a lot of calls being sold at a same strike, that's where people don't think there's a bottom, but that's where they think it could potentially bounce from. And if it breaks through that, expect a lot more blood and expect a lot more put inflow. But typically, when you see people starting to sell calls or puts, that's a good way to kind of mark up your own support and resistance almost. And it's also a good indication of like, okay, I'm seeing a bunch of calls being sold on Apple. Maybe it's time to buy puts on Apple because people are clearly getting ready to have these contracts get executed. And once they execute, guess what? The value of those contracts are going to start to go down because there's not going to be as many available. And with each move that Apple makes downwards, the value of those contracts are going to just become less and less. And with the puts, that's like the perfect time to get in because that's how I found the $19 to 2 grand. I found them at 19 and it was for 190 puts and they had about a month on them and they were $19 and this is when Apple was at like 214 or something and I saw attendees say they're selling calls on Apple. I went to Investor Central Club and then looked at the sells of calls on Apple and then I was like okay, that kind of looks interesting. So then I was like, where's like a really cheap option that I can kind of just gamble and test this theory out with. And I was like, okay, well, tariffs, iPhones are in China. They're trying to move production to India, which is like, I think the third worst tariffed country right now. So I was like, not sure why you're doing that, but okay. I was like, and then on top of that, like a 43% price jump in Apple Watches. That's just a figure that stuck out to me. I was like, 43% for an Apple Watch? Like, that's how it's going to increase 43% for us in cost? That's crazy. I was like, people are already upset prices. So this could get really bad. So 190s made sense, bottom, and just like didn't look at them. And then when all that tariff news started dropping with China, I was like, I wonder how these are doing. And like I looked at it the first time, they were up like 1,000% at like $1.21. And I was like, wow, that's amazing. And then I was like, all right. And then another week went by, and then they opened up at like $18. And I was like, what the actual, like, what
Mhm.
is this? And then I think they peaked at like 22.50 and then slowly just died off. But like from $19 to 2,200 just based off of like speculation. And again, it's just kind of using all those resources and understandings you have in an industry. And because those are hard plays to come by, but they're also not if you're like looking for it and you have the right set of circumstance. Like when there's policy shifting or any type of uncertainty in the market, it's like the one thing the market hates is when things are just in limbo.
Mhm.
So you think if there's a situation that could be in limbo for a month and it's going to affect a certain sector or it's going to like affect a certain group of people or whatever the case is going to be, you can always find a short that will pay you out like a stupid amount of money for just being paid. Granted, you're gonna have to get kicked in the teeth for a while, by the way. Like these are not easy plays to sit in at all because you're
Yeah.
sitting there and you're just like, oh my God, they were worth $2 yesterday and now they're worth $64 a contract. And it's like, but you have to remember your average is like 19 bucks. So you're still up $400 if you bought 10 of them. you turn less than $200 into what your weekly paycheck probably is, like realistic for the average American. So it's just, and again, that's where the psychology comes in. But I always warn people, I'm like, if you want to, like, because people will ask me for call outs, and I'm just like, I'll give them to you, but like, they're not pretty. Like, you're gonna have to average down at some point. My entry's not gonna be perfect. Like, I
Yeah.
buy really small, and then if anything, I'll end up having to scale in and wait for like a pullback, or I wait for till I'm down like 25% because it's just not going my way. But I'm like, I have time. So I was like, I'm gonna put a buy order when I'm down 25%. I'll put in another one at 30%. And again, it just comes down to risk because if I'm like, hey, I'm willing to put $500 at this, then it's just scale using maximizing that $500 as much as I possibly can to get the most value that I can
Mhm.
for this position. And it's not always going to be perfect. It's not always going to be pretty. Sometimes it doesn't work out and I get liquidated and it goes to zero and I lost $500 and there's nothing I can do about it other than not do it again. And that's like kind of how you have to look at it. Like you don't let like one loss define like your career. Granted, we're playing with money, so the risk is a little higher. But like, do you think NBA players go out there, have a bad game, and they go, you know what? I just don't think basketball is for me anymore. Like, like no, nobody. If they did, they wouldn't be in the NBA. I promise you that. Like,
Yep.
so it's the same thing in trading. Like, don't let one bad trade in one bad day because you lost a bunch of your portfolio. If you lost a bunch of it, you made it. You made that money at one point to get your portfolio to there.
Yeah.
You can do it again if you just are persistent. If you're, it's, I mean, it sounds like a gambler's mentality, like, oh, every rich
Yeah.
gambler is
Yeah.
just someone who never
Just one,
quit.
yeah,
Like,
one hand away from their millions, right? Yep.
exactly. So it's the same thing in trading. Like, don't let one, and that's kind of how I've always taken it. Like, I'm not the, like, I always say, like, I'm not a great trader. I think I'm a really good analyst, but I'm not a good trader. Like, I'm not good at trading. I'm good at analyzing stuff, but that helps me become a better trader over time.
A lot of it has to do with, like I said, it's a lot of it's just human psychology. We're built in a way that is opposite what trading requires,
Yeah.
right? And we also are taught the way that we value money is also the opposite of what trading requires as well. So a lot of times it's important to understand because like we've said, fear and greed often take over where you start making irrational decisions. But like
Hmm.
you've heard out there, it's like, this mathematician who's slightly autistic ended up making billions on the market. Why? Because he only deals with it in a logical manner. He
Yeah.
keeps the fear and the greed, which are emotions, out of his trades. Because at the end of the day, it's not, I need to be right with my position. I need to prove something here. It's, I have this much of a loss. I need to maintain my capital. I need to save what money I have, or I already made this much percentage. Asking for more is a higher and higher risk. Like I see this over and over again is we have people that are up 50, 100, maybe 200% on a position. And their first question to the group is, should I hold on for more gains? Should I hold on for
Yeah.
longer? And I've
Yeah.
always told us like there's no like the risk only goes up when it goes in your favor too,
Hmm.
right? The risk is increasing. The if it goes to 300%, 400%, your risk has now not only increased in terms of, that move might be over, but also you're now risking 400% of what you have already made. That money is technically not in your pocket until you've sold.
Yeah.
And so but it baffles me is like people are asking, hey, I just, you just went to the just went to the blackjack table and you just tripled your starting stack. And their question is, should I go all in on the next one? Right? That's
No.
basically what you're saying,
Yeah.
right?
Like,
So like if you can understand the context of what's actually going on, again, fear and greed are the driving factors for the market. in most situations. And a
Yeah.
lot of people who get into investing and trading don't quite understand that, and that's where they get wrecked. I've also seen a lot of situations where, I understand this too, and I've seen it happen with chemos too, as well, is when you're euphoric. When you're
Hmm.
euphoric, you tend to size up on your trades. You start to, double your stack, triple your stack, and go on bigger trades. And when it doesn't go your way, you're more likely to do irrational things. And not only have you just made this amount, but all of a sudden now you're on tilt because you might have lost, a big part of those profits. And now you're trading and trying to, you're on tilt, trying to get back. And those are
Yeah.
situations where things can very quickly go the wrong way. And that's often why you see trading being compared to gambling, because there are a lot of those similar mentalities and similar characteristics when it comes down to it. But understanding your own psychology, understanding your game plan and the logical approach of things, if you can stay logical on these situations and keep it into a plus minus percentage,
Yeah.
and not just look at the dollar amount, because again, it's the percentage of what you're looking at that's important. You risk $100 and it goes to $200, that's 100% increase. But people are like, oh, well, it's only $100. No, it's 100% increase. If you put 1,000, it would have been 2,000.
Yeah.
Understand the risk that comes along with it. And that's a lot of times, what is hard about the markets. And especially with newer traders, they don't quite see that. And they, a lot of times, I get it. They want their hand held. They want people to help guide them in those situations. Um, but that's also like I agree with you as well as I don't mind doing call outs for people, but understanding that we all have different risk management strategies, we all have different risk profiles. Um, I'm always going to tell people if it's good enough to screenshot and tell people about, you probably should take your profits, or at least,
Exactly.
leave a runner
Or
if you're one of
trim.
those
Yeah.
FOMO, yeah, one of those FOMO type of people. But it's you know when we give out call outs, especially with the type of community and the amount of people that are there, you get bombarded with messages the moment something goes in either direction. If it goes down or up, you get blamed if it
Exactly.
goes down. And if it goes up, you get all these questions of should I sell? Should I sell? Should I sell? And the thing is, none of us know exactly what's going to happen next.
Exactly.
If we did, we would have gone all in ourselves, right? If that makes
Exactly.
sense.
Like,
So,
yeah.
it's still a probability game. And, having your TA, having your chart analysis, having your flow on your side, having an understanding of the markets, those all increase the probabilities of whether or not you can make a living or make a profit off of those positions.
Yeah.
But anybody who says that they guarantee something or they know it's going in a certain direction, they're selling you snake oil, right? It's a situation where none of us know exactly what's going to happen. And especially I will say with these markets today, nobody knows what tweet's going to go out next that's going to
No.
completely move it in a certain direction. I mean, yes, I will say there probably are some insiders that got the in on the 90-day pause or got the in on what's about to happen with certain tariffs. And the tape did kind of give us a hint as to those things were about to happen. But obviously, this is us looking in hindsight, saying,
Yeah,
okay, yeah,
exactly.
I can see. You see all those puts to calls, or you see suddenly a big influx of calls suddenly come in that were all marked unusual and big money. Um, you know, Hindsight's always going to be 2020, right? So,
Exactly.
yeah.
But yeah, I think I don't know. I've never been I like to just give people analysis without the bias because that's the whole reason I started writing in the first place is I would like read these like Yahoo Finances and stuff like that and just be like, I mean, granted, if you paid me 20 grand, I'd probably spin a narrative into my writing too, but like I'm not getting paid. I have nobody to answer to. I can say whatever I want. So I figured out like I could read the same articles across four different publications, but like the facts and the numbers always stayed the same. So then I would just be like, okay, so like based on all this info, and then let's put all these biases together, and I guarantee you we can see some kind of common picture that all of them are looking at in one way or the other.
Mhm.
And that's how I write, and that's how I give analysis. That's why you'll never see me be like, I'm totally bearish on this. I'm like, hey, this is going on. Do with it what you will, whether you want to use this as your bottom or you want to use this as your conviction into your play. Go for it. That's
Yeah.
why I give as much detail as I do. That's why I'm sorry if they're a little long at times, but like it's not just to see myself type uh essay every day. It's purely because I thoroughly enjoy doing it, and I just figure like the more context you have, the better off you can be in making informed decisions.
Yeah. And like to go off that point, it's definitely exactly, a lot of people think, I mean, there are, for example, Stacks AI. You could probably go in on Stacks AI prints pretty blindly and still make a killing off of it, right?
Oh yeah.
The question definitely is, where's your sell point? Because again, we measure the highs. Not everybody's going to time that high. But if you're selling somewhere along that way, there's plenty of gains, right? Between 0 and 224% average, you're going to make some profits off of that.
Yeah.
But on the other side of it as well is don't just use Flow software to get into things completely blindly.
Yeah.
Flow software is something that it's meant to aid what it is that you've already done analysis on. If your charts, your technical analysis show, hey, we're about to approach this trend line and it's bounced off this trend line X amount of times, there's this much volume already there, then yeah, when you see the whale get into a position, it's more worthwhile for you to get along with that position for you to be in on it because again it coincides and it's a confluence according to what you've already you've had as your analysis.
Yeah.
um but I do that definitely see a lot of newer traders just look at it as, well, this guy spent this many million dollars, I'm going to get in.
Yeah.
Well, keep in mind too, sometimes with those situations, they're not good. Not everybody's going to time it perfectly. Those
Hmm.
are glorious when he gets in on those, and then the next day it pops, or the next couple hours it pops. But there may be drawdowns. The drawdown can be as much as 30, 40, 50%, sometimes even more before it comes back, right? But are you going to hold on versus them who maybe has an in with the CEO or has an in with the board that's doing these things and knows that that news article is not going to come out till next week. They just want to get into a position now, while IV is low, while certain Greeks happen to be in their favor, and they know that they can get, they're not going to get investigated by the SEC because they timed the bottom perfectly. So there's other factors to it, um, but understanding that it's a great complement to those who already have a bit of an idea of what they're looking to get into and want some signals from the bigger players that it is something worth looking at as well.
I think Google's going to be a perfect example to keep an eye. Like I'm tracking it live, so if people track that on Twitter with me, Google's going to be a really good example of like this is that thing is not popping at all. Like I think it's at 313. So currently if you're in it at when it got called out, you're like down $12 right now. Or however many contracts you bought, multiply that by 12, that's how much you're down. Um, and they also don't give out guidance. So this is a very, and it's a very out of the money call. So it's very high conviction and it's a big bet, but because it's unusual and it's a double down, I feel like it's an institution that knows something, or Google's going to announce a partnership or a release of something coming out in Q4 or Q3, whatever the case might be. I don't know. I see like a Q3 or Q4 release of something that is gonna kind of trump any guidance in terms of their fiscal guidance, but in terms of their rollouts and partnerships, I have a feeling there's something that's like brewing in the background that they are gonna announce during earnings to kind of get people to forget that they never give guidance.
Yeah. I mean, it's it's right now it's only speculation,
Yeah,
but I will
exactly.
say once the news does hit, we definitely have situations where we look back like, oh, like they knew. They
Yeah,
definitely knew. Like they
exactly.
definitely had somebody on the inside. And again, like we all hate how insider trading happens, but it happens all over the place. And those that are familiar with the markets understand that's just how the markets move,
It is
right?
what it is at the end of the day.
Yeah. Well, um, again, I want people to make sure if you have not subscribed to Max's Substack, Trades and Gains is also his YouTube channel, and on Twitter. I'll make sure those are linked in the description below so that you guys can get quick access to it. We also do have our Beehive newsletter that goes on a weekly basis to keep people up and in the loop as well. But keep an eye out. Max, you do some very valuable analysis for everybody here. And those that are interested in Investor Central Clubs are STAX software. We do have a promotion right now. One of our lowest and best subscribed deals that we have, 125. You guys can get in for your first month of Stacks for only $25. This is the best deal we've ever offered. Please take advantage of it because that does expire at the end of the month. So just a couple of days before that's going to be no longer valid. But yeah, everybody keep an eye out. Max does a ton of valuable analysis for you guys. So don't forget to take a look at that. Check out his Substack because there's information that you can use on there on a daily basis at this point. I'm really hoping that, we'll check back in due time. But I wish all the growth for you over there as well. I do know on the side. We'll probably chat a little bit. We've been wanting to do a $1,000 account kind of challenge to see, with the smaller purchases, smaller contract sizes and things like that, where we could take an account like that too. Just using Stacks and AI software that we have. But it's been an exciting journey so far. Very excited to see where things go from here, especially with the trajectory that we're on with you. Very happy that we brought you on board with us, Max.
Yeah, pumped to be here and happy to be a part of this. And thank you all for kind of having me be a part of this. And it's been a great journey so far. And I'm looking forward to, like, we're not even done with month one yet. And we
Yeah.
already have this much coming out. So I can't imagine what is coming, what I'll have coming down the pipeline in the next coming months as I get more comfortable and things get a little more fleshed out and smoother with the stuff that I'm starting to incorporate now.
Yeah, we're definitely going to have much more to come. So, keep an eye out for us. Investor Central Club. I mean, we're still, fairly new compared to some other companies, but I think, we're going to make a pretty big splash. And we already have with Stacks AI, but now with the additional content that we're going to be able to produce, this definitely is going to go off in the right trajectory, in my opinion.
Yep.
All right. Thank you again. And we will see you guys. Hopefully, we'll do another catch-up interview with Max in the near future. Get an idea of what's going on. But for those that made it this far with us, comment stacks down in the comments below. Let us know if there's any sort of information or any sort of content you'd like to see from us as well, so that we can put that into our pipeline to get going for you guys. Educational content, questions, things like that. Let us know, and we're happy to help you guys out. All right. This is Eric and Max checking out.